Bloomberg, the first word with Ken Pruitt.
Our guest is Jim Rogers, chairman of Rogers Holdings, on the line from Singapore. Jim, good morning.
Oh, Ken, I'm delighted to be here.
Well, listen, let's talk about the U.S. economy here. Lately, the numbers have been looking better. We had industrial production up, retail sales up, unemployment claims down. Is that going to end all the double dip talk?
Ken, I'm not sure we ever got out of the first recession. You look at the numbers, you'll see that unemployment is higher than it was a few years ago. You see that the government debt is staggeringly higher. So the people who've gotten all the money the government has spent are better off, Ken, but the overall situation is worse. We're not any better off, except the people who've gotten the money. We've quadrupled our debt or something. If you take into consideration the guarantees we've made, we've printed staggering amounts of money. No, we never got out of the first situation.
Well, what are you looking for out of the super committee of Congress?
Oh, you're bad for my nervous system, even bringing them up. Ken, you might be old enough to remember the Grace Commission. You might be old enough to remember the Graham-Rudman Act. All of these were things which promised we would take care of deficit spending in America. That was 25 years ago. Politicians ever since have been talking about how they were going to solve the deficit spending and the debt. None of them have. They all just go through a charade and then try to move on.
Yeah, I do remember all those, Jim. So what do you do as an investor when you keep that in mind?
Well, what I do as an investor, and who knows if I'm right, I own real assets, raw materials, silver, natural resources, because if the world economy is going to get better, I'm going to make money because of shortages. If the world economy doesn't get better, I'm going to make money because they're going to print more money. You see, Bernanke's already started on QE3. He barely finished QE2, and then we've got another one up and running. That's the wrong thing to do, but that's all they know to do, Ken.
Well, you mentioned silver specifically. Silver and not gold?
I own both. I was just using that as an example. Rice, natural gas. I could have picked one of 3 dozen raw materials that I own. I own them all. And by the way, I'm also short technology stocks in the U.S., and I'm so short emerging market stocks around the world.
Why emerging market stocks?
Well, they've all been very overexploited. Right now, there are 20,000 MBAs flying around the world looking for hot new hot new emerging market stocks. That's not a bottom, Ken. You're old enough to know that. That's certainly not a bottom. That's the time when they were very overexploited. The time to buy them will be when there are 20,000 MBAs who are out of jobs, and all those emerging markets are being sold. That will be the time to go back into emerging market stocks.
Well, the big theme here over the past several years is capitalize on digging stuff out of the ground and selling it to China. Is that not going to work anymore?
Well, I own the stuff. The stuff is where the shortages are. Yes, a lot of people have been making money digging things out of the ground, producing things and sending them to China. That's going to continue, but it's the stuff that's going to be better off than the stock. In the 70s, 1970s, stocks did nothing. Economies did nothing around the world. And yet we had one of the great bull markets in history in commodities because of shortages and because of printing money. We're right back where we started 40 years ago.
Well, in what form do you own this stuff?
Well, I mainly own the Rogers Index because my lawyer won't let me buy specific commodities other than gold and silver coins because I write about it. I've got a commodity index, etc. So I buy the Rogers Commodity Index. And index investing, as you know, for most people, Ken, is the best way to invest in anything, whether it's stocks or bonds or currencies or commodities, just because the index investing outperforms 70 or 80% of active management year after year after year.
Okay, when you mentioned gold and silver coins, you actually take delivery of the stuff.
In my pocket. If I got some in my pocket right now, if I was sitting there on your set, I would show you a couple.
Well, and that works for you, even though in the coin market you tend to buy retail and sell wholesale.
Well, yes and no. There's some places that don't give you such terrible markup, but that's a very good point. You should be very careful if you buy coins. Blanchard down in New Orleans, which I've done business with for a long time. I cannot do business with them anymore. There are people, and I used to know Jim Blanchard very well. So you have to be very careful if you're going to buy coins, because some people do charge unbelievable markups or give bad service or both.
You're still a bull on agricultural commodities.
I'm much more bullish on agriculture than I am on most other commodities because, we have terrible shortages. We have very serious problems with inventories, and we have, as you probably know, a shortage of farmers developing. The average age of farmers in America and Australia is 58. In Japan, the average age is 66. I mean, nobody's become a farmer for 30 years.
We're talking with Jim Rogers, chairman of Rogers Holdings. He's on the line from Singapore. But, of course, agriculture is a lot different than it used to be. I mean, the average farmer may be 58, but he's also not, here's something to stretch our memories for, he's not, following a mule.
Well, I agree with that. There's no question. But be that as it may, still, in 10 years, Kenny's going to be 68 if he's still alive. No matter what he's doing, if he's still alive, he's got to be in the field. Somebody's got to be in the field doing the labor that's required, and even if it's more and more mechanized and computerized, which it is, and, genetically modified crops, etc., but the world has been, even with all those technological breakthroughs, the world has been consuming more than it's been producing for several years now. That's why the inventories are so low, and all these guys are getting older and older.
Well, I saw something else the other day about a well-known money manager worried about it's kind of stuff we used to hear back in the 70s. Population growing geometrically around the world, but assets growing arithmetically. Are you in that camp?
No, I mean, I know that we've had recurring bull markets in commodities and recurring bear markets. Maybe it's different this time, Ken. Maybe this bull market's going to go on forever. They never have in the past. Mankind has always come up with some breakthroughs or ingenuity or something which has caused the market to return. I suspect this bull market will end someday. I mean, hallelujah if it doesn't, but I've never seen one that didn't. So call me in 5 years. Call me in 10 years.
Well, on the campaign trail, Texas Governor Rick Perry created something of a firestorm by saying it would be treasonous for the Federal Reserve to start printing more money. What are your thoughts on that?
Well, the Federal Reserve already has been printing staggering amounts of money. We're soon going to run out of cotton, the rates they're going. By the way, American money is not made of paper, it's made of cotton and flax. They've printed huge amounts of money. That's all Bernanke knows. He doesn't know about economics or finance or currencies. He just knows printing money because that's what his whole intellectual career has been spent studying. He just recently said we're going to keep interest rates low for another 2 years. Well, Ken, the only way you can do that is if you intervene in the money market, in the currency markets and the money markets. So he's already started QE3. He hasn't said it. He's trying to disguise it. But how's he going to do it? No, they're back printing again. The first currency act of Congress in 1792, if I remember correctly, it made it a capital offense to debase the currency because they've been through a lot of currency debasement, in the early days of the United States. And so maybe we should bring that act back again. But I think if we did so, Bernanke would resign or flee the country or something else.
Thank you, Jim. Always enjoyable. Jim Rogers, Rogers Holdings. He's on the line from Singapore.
You can subscribe to Bloomberg's premium podcast service at Bloomberg.com/Tom Keene and listen to Bloomberg The First Word weekday mornings at 5 Eastern on Bloomberg 1130 in New York or on Sirius and XM satellite radio channel 113. Copyright 2011 Bloomberg LP.